Imagine letting a rocket under like a $6 billion pile of cash.
Yeah, that is basically what just happened in the markets today.
Right. So welcome to our deep dive into the April 21, 2026 Bitcoin News Digest. We are here to give you the crucial why behind today's financial headlines.
Because our mission today is to figure out exactly how Bitcoin just blasted through that stubborn 2-month $75,000 ceiling.
And vaporized a massive wall of short positions along the way. I mean, it wasn't just some random speculative spike,
No,
right?
not at all. We are seeing a fundamental shift in who is actually buying. The price was actively shoved higher by massive corporate accumulation.
Right. And Strategy Inc. is totally the main character here.
Oh, absolutely. They just executed a record $2.54 billion purchase, which pushes their total holdings to 815,061 Bitcoin.
Wait, doesn't that mean they officially surpassed the BlackRock iShares trust?
It does, yeah. Out of the 21 million Bitcoin that will ever exist, this one single company is now closing in on nearly 4% of the total finite supply.
It is honestly like watching a corporate Pac-Man.
That is exactly what it is.
And the mechanism they're using is wild. They are issuing at-the-market equity sales, so basically printing new shares of their own stock,
Right.
and instantly converting that newly raised cash into Bitcoin. They found a cheat code to turn their own equity into a finite digital asset.
Which completely changes things for the asset itself.
Yeah.
You know, it moves Bitcoin from this volatile fringe bet into a standardized corporate treasury asset.
Mm-hmm.
And smaller tech firms are paying attention.
Like hyperscale data and DDC Enterprise, right?
Right. They're building millions in reserves, too. DDC is even launching AI tools to help other businesses manage their own crypto holdings.
But wait, if this corporate strategy is such an obvious no-brainer, why is the U.S. ETF market looking so messy right now?
Well, messy is definitely a good word for it.
Because if you look at Monday's numbers, sure, there was $238.4 million in net inflows, but BlackRock carried that entirely on its back.
Yeah, they did.
The other giants, like Fidelity and Grayscale, actually bled millions in outflows. That looks less like a unified front and more like, I don't know, a massive tug of war.
The U.S. retail market is definitely noisy, I will give you that. But the real anchor is actually being built overseas right now.
Okay, how so?
Well, a new survey just revealed that a staggering 65% of Japanese institutions now hold Bitcoin for diversification.
Wait, really? 65%? That is massive.
It is. And they aren't just, dipping a toe in. They are planning to allocate 2 to 5% of their total capital over the next 3 years.
Oh, wow. So while U.S. ETF investors are constantly trading in and out based on daily sentiment.
Japan's institutions are quietly pouring concrete. They are cementing this resilient global price floor that operates completely independent of U.S. retail volatility.
Okay, a floor is great, but you still need the broader economic weather to clear up if you want a breakout like the one we saw today.
Exactly.
Yeah.
And the weather is definitely clearing.
So how does this returning risk-on appetite actually connect to, say, the average traditional stock portfolio that you might be holding?
Right. So currently, Bitcoin is acting kind of like your stock portfolio on steroids.
I love that analogy.
Well, the correlation with the S&P 500 just hit 0.74 this month. In finance, we call that trading as a high beta proxy.
Meaning when the broader stock market goes up, Bitcoin tends to follow, but with much bigger swings.
You got it. And the broader market is definitely swinging up right now.
Because the geopolitical temperature is cooling off, right? Especially with the U.S. and Iran diplomatic talks happening in Islamabad.
Right. And regardless of the actual politics behind those talks, which, we aren't taking a side on, the market simply loves reduced tension.
It lets capital flow freely back into equities and crypto.
Exactly. Add to that the anticipation around Federal Reserve Chair nominee Kevin Warsh.
Oh, yeah. His Senate testimony today has everyone watching for hints on late 2026 rate cuts, plus institutional asset custody rules.
And there is a mechanical setup here, too. Bitcoin's realized volatility has been sitting unusually low, like under 46.
Which means the market has been consolidating, buyers and sellers at a stalemate, building up pressure like a tightly sealed pressure cooker.
Precisely. And when that pressure finally releases, it tends to cause a massive price surge. Right now, that built-up momentum points toward the next major resistance zone at around $82,000 to $83,000.
So just tying this all together for you, this breakout isn't just retail hype. It is structurally driven by corporations acting like Pac-Man to hoard supply.
Yeah, supported by a new international price floor built by those Japanese institutions.
But here's the lingering thread we want to leave you with. Strategy Inc. still has over $46 billion in capacity to sell more stock and buy more Bitcoin.
Right, and at this pace, they are going to own 1 million Bitcoin by November 2026.
Which raises a massive
A
paradox.
huge one.
What happens to the fundamental promise of a fully decentralized financial network when a single centralized public corporation corners that much of the finite supply?
Definitely something to mull over the next time you check the charts.
Thanks for joining us on this deep dive.